Joseph Tan, Asian chief economist for Credit Suisse. He joins us here in the Singapore studio. We've been talking about China all along, and now that report suggesting, or a survey suggesting, that China could be free-floating the yuan. So much for appreciation. Now we're talking about free-floating. Is that realistic?
Well, I think the story is getting crazier and crazier, Has. I mean, to be honest, there were some in the market calling for very sharp one-off revaluations in the CNY as much as 5%. And now, of course, the story is getting to a free-floating of the currency. I think if you look back at the history of China, it is not in their blood to be doing something like that that's so drastic and shocking to the markets. One cannot compare back to the same episode back in 2005, because that was when the peg was held for 10 years, and it was a clear step, a monumental step at that point in time. And this time now, we are not exactly under the same sort of conditions.
Taking a look at the U.S. has been putting a lot of pressure, yet the tone is different from the different leaders. I mean, Obama putting lots of pressure, Geithner easing somewhat. How do we even begin to understand where the U.S. is coming from?
Well, I think, the last time when I was on the show as well, I said that, Tim Geithner, much to his credit, understands the issues and the sensitivities surrounding this issue. Quite frankly, if you push very hard on this issue, the harder you push, the more it becomes the issue of sovereign pride, the more China is unlikely to budge on the policy. So I think it's best to actually take the discussion behind scenes, and thereafter you will probably see China actually doing some things to try to ease up on the CNY.
But the yuan is not a bilateral issue. It could be taken to a multilateral level, because a lot of countries, especially emerging markets, are affected by the level of the yuan.
Which is why it's very significant, because if you look at the CNY, say, compared to 5 years ago, I mean, China was not that important a trading partner for the rest of Asia, but today it is. I mean, China is typically the top 3 trading partners for the rest of Asia. So with the Chinese holding back the currencies, actually holding back the appreciation headroom for a lot of Asian currencies. And again, it's very important to remember, upcoming the next 3 months, we have a number of key meetings, such as the G20 finance ministers meetings, central bankers meeting, the strategic economic dialogue between US and China, as well as the leaders meeting towards June. And I think these international forums will be used by the US to some degree to put the case forward for some appreciation on the CNY.